Good afternoon, everyone. You're welcome to our weekly program, the Redeemed Christian Church of God, CRA Nottingham. This session will be about financial education, and we'll be looking at how we can improve our financial education and how that financial information impacts our lives. We have an excellent guest today, who I'll be introducing later on from Experian. But before we go into that, we would invite our pastor, Pastor Mbikole, to share a word of prayer with us. Pastor, are you?
Yeah, I'm on.
Yes,
on
sir.
This edition of our COVID conference, want to thank John for agreeing to be part of us today. Want to say thank you and welcome. And I'm sure that we are going to be blessed. We are going to be more knowledgeable about the state of our finances and how to manage our finances after this conference. So can we pray? Heavenly Father, once again, we want to say thank you for the privilege and the opportunity to be alive, to be well, and thank you for a wonderful day. Thank you for this conference that is about to take off. Thank you for the knowledge that we are going to gain today through the experience of John. Thank you for Luis, who will be also asking the questions, and the team that are putting all this together, the Folksnet team. We are very grateful. Father, we also thank you for as many that will be joining, that today's discussions will impact lives positively. Thank you, Heavenly Father, for in Jesus' name we have prayed. Amen. Amen. Thank you. Bye.
Amen. Thank you very much, sir. Like we said earlier, our guest today is John Webb from Experian, the credit referencing agency. So he's going to be talking to us about financial education, and he's going to be sharing with us some insights as to how best we can be informed about our finances, and particularly around our credit rating as well. Over to you, John. You're welcome.
Great. Good morning, everyone. Good afternoon, actually. Thank you for having me. I'll do a brief introduction before I move on to talk a little bit about the credit report and what's on there. And we'll cover a few things, and I'll talk about these shortly. But it's probably important to set the scene first, is that and who I am. I'm John Webb, and I work in consumer affairs at Experian. So that entrusts me with educating and guiding the public around credit reports and scores and what they mean and how to manage them, and ultimately how to improve your credit score, which for anyone who's ever applied for credit, and we'll cover what kind of range that is in a moment, you'll know how important that is. And Experian are one of the three main credit reference agencies in the UK. So the other two are Equifax and TransUnion. And I'll intro it by saying anyone who wants to get their credit report can do so for free from all of the main credit reference agencies. So Experian, Equifax, and TransUnion, and you can get your free statutory report, it's called. So I'd encourage anyone to do that, and it gives you a good idea of everything that's on your credit report, and we'll cover that in a moment. But it gives you a good idea of where you are financially and what you need to do to maybe improve, or maybe just start building your credit report from scratch if you've never done so before. So I'd encourage you to do that. So I've got a bit of a presentation, so I think if we can bring that presentation up now, I'll talk you through some things, and at least give you a good sense of what's on the credit report, and a little bit about how decisions are made financially. So if we jump into the second slide, which is the agenda, what I'm going to cover first is really what's on your credit report. Now, we get into a little bit of the nitty-gritty about what shows on a credit report and how it will show to you. But it's a good place if you've never had any knowledge of this or you've never taken an interest in checking your credit report, you might not know what's on there. So I think it's a good basis to start how we review what's on there and what's on your credit report and then what's next. So we'll cover that, then we'll jump into a little bit about credit myths and credit scoring and decisions. So really importantly, I want to cover how things really affect your credit score and what things affect you when you apply for credit. So how do lenders really make the decisions behind the scenes that, when you apply for credit, whether it's an accept or refused or how it determines the interest rate. That's what I really want to give you a bit of guidance on. And finally, we'll talk a little bit about protecting your identity. So I think probably an ongoing and quite serious topic is just identity.
Audio. John, we seem to have lost your audio. John, we're not hearing you. We've lost audio. John?
Any of the credit reference agencies. You won't see it split up like this, but it's a great way for us to see what's on your credit report. And we split it into these 4 sections. So the first is public data. So public data is anything on your electoral register and public financial records. And we'll talk about all of these in a little bit more detail in a moment. Industry data, so that's anything, and usually, by the way, the biggest part on someone's credit report.
John, we've lost your audio again. Right. So apologies, guys. We've lost audio with our guest. So he was just giving us a brief introduction about our credit rating and what the agencies take into account when they're trying to create a credit file on an individual. And he's told us that they have four sources of data, and he was just going through the different sources of data to then show us exactly what they're looking to. So I believe he's trying to connect back now, and hopefully once he comes back, he'll be able to then talk us through exactly what we need to look out for in credit rating. Now, I'm particularly taking notes as well because it is quite an interesting topic, because as he's rightly mentioned, credit ratings affects us in different areas of our lives. As long as you are an adult in the UK, you would at some point require some form of credit checks done on you. And so it's very important for us to be able to identify exactly what those people see when they begin to run those checks on us. And that is part of what John is going to help us with today. Now, he was also saying that the credit reference agencies, there are 3 of them. You've got Experian, you've got Equifax, and you've got TransUnion, and that you are able to access your credit file from any of them as your statutory right. So it is a right for you to be able to demand that credit report. It's free as well. He's also said it's free. So he encouraged all of us to try and demand or ask for those credit reports from any of those credit agencies as well. Now, there are a few questions that have been sent in before this program that I was hoping to run through with John. But as I can see, he's already covering some of those questions. And if you've sent in questions before, I would advise that you listen. And as you listen, I'm sure you'll find that some of those questions will be answered in the course of John's presentation. So that's what we've covered so far. I don't know about you, but it's been quite an interesting one for me in the very short time that he's spoken so far. Quite a lot for us to do. So if you don't have your notebook and your pen ready, I would say while we're waiting for him to come back, can you quickly rush and grab your notebook and your pen so you can take very, very good notes of all the important information he's going to teach us today. Financial education is quite important because it cuts across every area of life, and it's impossible for you to go through life without having a sound financial education. And a lot of times people run into problems because they just don't know what they don't know. And today is an opportunity for us to correct a lot of those things as well. So I believe we're still trying to get John back. I know he's working on fixing the audio issues, and I'm sure we would have him back very shortly. In the meantime, if you have any questions that perhaps you've not sent in previously, you still have the time now, while we're waiting for him to join, for you to send your questions on Slido. So go to Slido and send in your questions, or you can go to our Facebook page and put in your questions there as well, if that's easier for you. So if you look at the bottom of the screen, you'll find that the information is scrolling. The information on Slido, the information on how to subscribe, the information on where to find us on YouTube and Facebook, they're all scrolling at the bottom of the screen. So start sending in your questions. So we have all those questions ready and waiting for when John comes. And again, if in the course of John's presentation he covers your questions, then at least you'll be satisfied that you've gotten answers already to your questions. I have quite a few questions here myself, which I've been noting down while he's been talking, and I'm just keenly waiting for him to return so I can start asking those questions. Now, the event code to use on Slido is 51241, and that's the event code. So if you go onto Slido and type in the event code 51241, you'll be able to ask your questions directly, and we'll be able to see it in real time, and then be able to present those questions as well to John as soon as we have him back on. Okay, and we'll be playing the intro until he comes back. What happened? of technology. But good to have you back, John. We were really enjoying the presentation there before we got interrupted by technology. But great to have you back. John, can you hear me, John?
Yeah.
Okay. Yes. Please go ahead.
Okay, so I'll pick up where I left off, which I think was kind of discussing roughly the sections that we split a credit report into, and I got to industry data. So I'll kind of bump on from that, but excuse me if I just rattle through this a little bit faster than I might have done, just because I want to pick up the pace to make sure we get to the questions. But the second one is industry data. That's all of your credit accounts, usually the biggest section on someone's credit report. The next is derived data. Now, don't take too much notice of this name. I've made it up for this presentation, but it's anything that the credit reference agencies create because of something you've done. So whether you've linked names, so getting married, for example, you might change your name, and we need to link those names together, and it's linking to people if you apply financially together, and linked addresses and any applications for credit. And the final part is consumer data. So this is the only part of a credit report you can currently add yourself at the moment, which is something called a notice of correction. Now, it's a short statement and it just explains the circumstances around something on your credit report, but we'll talk about that a little bit more shortly. Now, I'll jump into the next slide, which is public record data. Now, the first section of this is quite easy. It's the electoral register. And it's important to be on the electoral register, especially if you're applying for credit. Now, the first part is it can add points to your Experian credit score. So it can add up to 50 points on the basis that it helps prove your identity to lenders. So lenders want to know that you are who you say you are and you live at the address that you say you live at. So this is a way to confirm it. And it also confirms some level of stability as well, particularly if you've moved addresses and you've got a history of that in your credit report. So whenever you move address, getting re-registered on the electoral roll immediately helps prove that kind of history of where you've lived. And the second part of this is public financial data. So public financial data is one of the most serious things that you can have on your credit report. Now, it usually signifies some type of serious financial difficulty in the past, and is where it contains anything that's insolvency related, so a bankruptcy, for example, or court judgments. So an example of that is a county court judgment. If you have anything on here, it lasts for 6 years from the start date of whatever it is, much like most things on the credit report, by the way, is a 6-year history. And we'll talk about a couple of exceptions on there. But if you've got anything on here, again, if there was a genuine reason for it, this is where we'll pick up things like the notice of correction, because you might want to drop that onto this, whichever entry you might have on here, whether it's one or more, if there was a genuine reason for it. Now, by genuine, I mean something like redundancy or illness or bereavement, some reason why you couldn't necessarily keep up with your scheduled repayments, then you might want to put that on here, and it offers lenders an explanation as to why this happens. So it can sometimes help an application go through with the lender as well. Now I'll jump on to the next one, which is industry data. Now again, industry data, don't focus on the title I've given this, that's not how you see it in your credit report, but this is your credit accounts. And most of them show standard information. We'll talk about a couple of them in a moment, but as a general rule, what it will show lenders, and by the way, lenders don't quite see everything that you would see when you look at yours. So for example, on this account example, you'll see this is an NPower account. Now a lender wouldn't see that it's NPower specifically, they would see that it's a utilities account. But for the most part, they see a lot of this information when it goes through to them. And predominantly, the most important thing is the payment history. Now, the payment history goes back 6 years, and you'll see on this account it shows with zeros. Zeros, by the way, for this purpose is up to date, paid on time, and that's great. That's exactly where you want it to be. If you miss a month, it'll show as a number 1. If you miss 2 months, it'll show as a number 2, and so on. And in normal circumstances, that can go up to a number 6, up to 6 months late. And then the account could be defaulted by the lender. We'll talk about those on the right-hand side of this slide in a moment. But when that goes to default, we'll kind of understand that that's closed by the lender. But it shows other information. So when you started the account, it will show you the address the account's registered at, date of birth, and so on. And a couple of important things as well. It'll show the outstanding balance on the account. Now, this is really important because obviously that's going to help tally up your total amount of borrowing or how much is outstanding on that account. But when I talked about electoral register before, that's important to think about, okay, are my accounts all registered at the same address? And if they're not, that can sometimes cause a little hiccup with lenders, because lenders will be looking at different addresses where different things are registered, and that may cause some type of confusion, may ask them or prompt them to ask for additional information to just confirm your identity. Now I'll move on to default accounts quickly. So a default account, effectively, by a level of or a length of time where you haven't made the assigned payments to the account, then the lender can default that account. It means effectively they've closed it with an outstanding balance on, and then you will then obviously be expected to pay off the remaining balance. That could be entering into an arrangement with them or paying off the balance in full if you have that ability. But it stays for 6 years from the start date of the default, not the start date of the account. So when the account switched to a default, that's a new status, and it's 6 years from there, and then it's dropped off the credit report, and that's irrelevant of whether it's been paid or not. However, if you have a default account and you haven't paid it, then they have the option to pursue that through the courts, which is where you might see a county court judgment come on there as well. So that's important. And just on here, there's a little flag, and it says debt assigned to Keys member, and you'll see it with a blue information tick next to it. Now, Keys is our database of lenders. So what this means is this account has actually been bought by another lender, and they've bought the account, and then they've registered the default as another account on your credit report. We put this little flag there just to make sure people know that that happens. It's quite common, and it's just so lenders also know that there's not 2 defaults. There's effectively 1 default, because it's...
John, I believe we've lost you again.
Yeah, I think someone just put it on hold, but I'm back anyway, cool. I think.
Yep. Yep, we can hear you now. Go on, please.
Great. We'll jump onto the next slide, which has special flags and credit cards on here. Now, I just talked about one flag on there, but special flags are a little note that lenders can put to say something specific about an account or the behavior of an account, the status of an account. Now, we've talked about where a default might be assigned to another lender who shares their information with Experian. However, they can put an assigned flag on there, so they may just put a debt assigned flag to a default. If that default has been sold to another company who doesn't register their details with Experian, it's likely then that that other lender shares their information with one of the other credit reference agencies. But I'll only pick up a couple of important ones here. One which is arrangement. So if you agree an arrangement with a lender to repay a specific amount of borrowing on the account, that may be because it's a default or because you can't repay or keep up the minimum required payments, they'll put a little flag there to note that you are in an arrangement as well. And finally, I'll just mention partial settlement, because often where you have an outstanding balance, you may make an arrangement with the lender to pay back 50, 70 or 90%, for example, of that balance, and they'll agree to wipe it off. Now, they'll agree, and on your credit report, for all intents and purposes, it will show with a 0 balance, and if it's a default, it'll show satisfied. But they may put this little flag there that just says there was a partial settlement, and they don't say how much it was, they don't say what the percentage was, but it just says to other lenders that's the amount that, you didn't pay the full amount, you paid a certain amount of it. And I just want to talk about credit cards really quickly, because Credit cards show additional information that your normal accounts wouldn't show, like a bank account, for example. And the reason being is that lenders look at credit cards, and we'll see from our score factors in a moment, as a really good way to check your current financial situation, bearing in mind the outstanding balance that you have or how much you're using your credit card. But importantly, for a couple of extra bits they've put on here. Now, the first is cash advances. So we know that you can use your credit card. You can go to the cash machine or ATM, take out your cash, but it's very high interest. It's immediate interest as well. And lenders want to keep an eye on how much you're doing that, because effectively taking money from your credit card usually suggests that you're doing so because you haven't got the available cash in your normal current account to be able to pay for it. So it's a very expensive way of borrowing and can be quite risky to lenders. So they note on here the number of times you do it and the amount that you're doing it. And the odd time is okay, but doing it frequently could mean more significant risk for lenders. And finally, they also put if you're on a promotional code. So we know people who manage finances quite well typically switch deals to get the best interest rates, which often means using a lot of your available balance. And if that's the case, they may switch to a promotional rate using a high amount of balance, which might affect your score. So lenders note down here if that's the case, just so other lenders know that's the reason why you're using a high amount. And then we'll jump on to the next slide, which is derived data, it's called. Now, this shouldn't take us too long to go through. This is there's a few sections on here. Now, the first is searches. So we'll typically know about hard searches and soft searches. And the easiest way to form a distinction in these two is to know hard searches only happen when you apply for credit, the process of formally applying. Anything else is a soft search. So anything used on comparison sites or mortgage quotations or identity checks, they're all soft searches. Now, both stay on your credit report for 12 months, but hard searches are seen by lenders and soft searches are not seen by lenders. They're only seen by you. So you don't need to necessarily worry about the amount that's in there, and particularly if you use a comparison site to search for car insurance, for example, you may see in a month 20 or 30 entries or more pop up on here. Now, it's nothing to be concerned about. That's just what happens when you use a comparison site because they use so many lenders on there. Linked names, quite a simple one, but if you're married or if you change your name, we link up the names to make sure that your credit information is all linked. And linked people. Now, this is just an interesting one because I said to the most part, information on your credit report stays for 6 years. But if you're financially linked, now what that means is if you apply for a financial product with someone else, so a joint account or a joint loan, for example, this financial association will be created. You don't have to have been accepted, but just applying will create it. And the important thing is this link stays forever until you tell the credit reference agencies to do a financial disassociation if it shouldn't exist anymore. Now, importantly with that, what that means is that when you apply for credit, if you're financially associated with someone, the lender can then check that other person's credit report. And if their history is not quite as positive as yours, for example, that may mean that it could impact the decision when you apply for credit. And finally, linked addresses. So again, quite a simple one, but any account that you have registered with a lender or any application, for example, with a lender, they'll note down in here the address that you applied to, the address that you're linked to. And every time you move address, the lenders will update that as well, just to show linked addresses. And it helps take account of slight variations in addresses as well. So I'll jump on to the final slide, which is a final slide about what's on your credit report, which is the notice of correction, which is, as I said, a short statement, usually to explain some circumstances, usually to explain something that may be a bit negative. So that could be a period of late payments or a default account or any public record information like a CCJ, county court judgment. But you can put it on if, for example, you can't get registered on the electoral roll for whatever reason. You can add this on there just to say you are who you are. You are living at this address, and you can prove your identity if they ask you. And you may want to put a note on your credit report to explain a vulnerability. That could be gambling. We have support on our website for that as well, or mental health issues where you may have a problem taking credit that you can't afford to repay. You can put a a cautionary note on there to explain to lenders, please don't lend me any credit. And finally, if you're a victim of fraud, you can put something on here which is called a password notice of correction. It means when you apply for credit, lenders should ask for this password, which only you should know. Great, so that covers our kind of what's in the credit report. Now I'll just jump on to a few more bits just before we, I think, start taking some questions. I think there's probably a few coming through. But I just want to talk about a few myths, and I'll just cover off a few of these, which is firstly that there is a credit blacklist, which is of course a myth. There's no blacklist that stops lenders lending anyone credit. In fact, no matter what you've got on your credit report, and it may be that it's negative in the eyes of lenders, so late payments, defaults, so on, there's always a lender who's willing to lend, but what it may mean is that the interest rate is higher and the amounts they're willing to lend are lower. So it's important about doing some research first, and particularly using comparison sites to search for eligibility before you apply for credit. Any occupants, whether they're previous or currently living with you at your address, affect your credit score, which none of them do. Your credit score is individual. Now, the only way your credit can be impacted by someone else is by that financial association we talked about before. And then finally on this one, that checking your credit report damages score. Now, we know a lot of people think that this is the case, but you can check your credit report as often as you like, and we'd encourage you to do it on a fairly regular basis, at least annual, but primarily a little while before you want to make an application for credit, just so you know what's on there and you can deal with any issues that come up. And then we'll move on to credit score education. So I like this slide because it helps put things into perspective for you so that you can understand how things really do impact your credit score. And I just want to caveat this by saying this is for an Experian credit score, which goes up to 999. And these point factors are very black and white, but they're based on an Experian score only, although they'll have similar effects at the other agencies as well. But registering to vote, as I said, brings you up 50 points. But what you'll see on here really, and what I want to highlight, is how a credit card can benefit you, and also, depending on how you use it, it can reduce your score quite significantly as well. So having a credit card with a limit of over £5,000 can boost your credit score. But if you've got a credit card with a limit that's below, with a balance that's below 30% of your credit card limit, you can gain up to 90 points. And getting that to low or zero, now low is about £50. So having that credit card with a very low balance can boost you by another 60 points as well. And then when we look at what can bring your score down, there's some quite interesting ones, because paying a bill late could take you down by 130 points, which is quite important to think about. It's just one payment. You might think nothing of it, but it can decrease your score quite a bit. But if you see these ones on here as well about using a credit card, using over 90% of a credit limit can bring your points down by 50 points, which is quite a significant amount. So again, reinforces, if you've got credit cards, try and keep the balances as low as possible. And then you can see on here, having a county court judgment could drop your score by up to 250 points. And having a default actually is the most significant thing on your report, which can drop your score by up to 350 points as well. Now we'll jump on quickly to the next couple of bits, and then we'll wrap up the presentation part, which first is I just want to talk about how a lender decides when you apply for credit. And probably commonly, I think people think that a lender will use just your credit report or your credit score from a credit reference agency to decide, but actually they don't. What they use is generally three things, which is their own records. So if you already bank with them, or at least have done recently, they'll have information about how you ran and monitored that account. And then also they have your application form. So that's just kind of a way of saying your affordability information. So what's your salary? Do you have any dependents? Maybe any savings that you have, and so on. And finally, they also look at what's on your credit report. The lenders take these three things and they generate their own credit score for you. And that credit score determines whether or not you're accepted or not, and what rate you get and what limits you get and so on. So ultimately, it's always the lender that decides. Credit report factors in quite heavily because it obviously helps the lender assess the riskiness of lending to you. But it's important to know that lenders do come up with their own credit scores when they are deciding. And off the back of this, if we jump onto the next slide, this is just a little bit about credit refusal. So if anyone is refused credit, can be a little bit confusing as to why. So there's two things. Now, firstly, we've got an online guide, interactive guide that takes you through the steps if you have been refused for credit. And then I'd also just suggest, if you have been refused for credit, you don't know why, make sure you get your credit report, to check to see what's on there. And we'll jump through the next slide about credit report support. But I'll only just highlight on this that if you spot an error on your credit report, Experian and all the other credit reference agencies will always query that for you on your behalf, and they do that for free. So if you find anything you're not sure about, please do let us know so that we can help with that. But then I'll spend the final couple of minutes here just talking about how to protect your identity. So we see a lot about identity theft, in the news, and anyone who may have been a victim will know about this. But what is really important, I think, with protecting your identity is making sure you kind of stay ahead and making sure that you protect yourself as best you can. Now, there's a few ways to do it, which is secure connections. Okay, so always thinking about where you're connecting and how you're connecting. For example, free public Wi-Fi, connecting on there if it doesn't require a password, and then using your banking apps or anything where you have to log in is very risky because people can monitor it and check it. So try and avoid that wherever possible. Make sure everything's password protected, including mobile, which we have here that says almost 40% of people don't password protect their mobile. And thinking about the vast amount of information that you probably have to hand in there, it's a good idea. Checking your post regularly, so making sure that there's nothing untoward coming through the door that you don't recognize, for example, just a bill or something like that otherwise you might just throw away, but just important to keep an eye on it. Making sure you check your credit report, because of course if someone has stolen your identity and applied for any credit, it'll show on your credit report, so it's good to check that regularly. And then being social and safe. So of course lots of people want to be online through different platforms, sharing everything that they want to share, but it's important to make sure you understand what you're sharing across everything and making sure that you're as well protected as possible. So don't post too many personal details. Don't post when you're going away on holiday. Don't post what your home address is, for example. Just be careful about what you do. And then we'll jump on just to say that we have victims of fraud support. So we have a specialist team here in Nottingham, actually, who, if you have been a victim of fraud, they'll support you through the whole process, which they do for free, querying everything with any relevant lenders and making sure they check in with you over the course of the process to make sure that's done. And then the final two bits, which will take me 1 minute to go through, which is if you want to visit our website, experian.co.uk, there's lots of additional support and content on all sorts of things, particularly around coronavirus and your finances at the moment. But lots of things: ID fraud, gender reassignment, financial abuse, armed forces personnel, and so on. So there's lots of stuff on there if you want to have a look. And then on the final slide, and apologies by the way for going through this a little bit quickly, I know we lost some time at the start, but on the final slide here, it's just a quick note to say on our website you can get your Experian score for free every 30 days when you log in. You don't pay for that. It's a great way to just track how your score is doing. I've explained you can obviously get your statutory report for free anytime you want to, and we have a premium product called Credit Expert. So anyone can take a kind of look and see if that's of any interest to them at a certain point in time. So thank you. I'll wrap up my presentation there because hopefully we've got some questions through that we want to answer. And again, I'm very sorry for going through that quite fast, but hopefully you caught everything you needed.
Hi, thank you very much, John. So just like John said, we lost some time. We lost about 8 minutes to some technical challenges from John's side. So we'll be adding those 8 minutes onto the end of the presentation or to the session. So we'll have an extra 8 minutes at the end of the session just to make sure that we have enough time to cover off everything that we need to cover off. So thank you very much for that presentation, John. It's been very, very helpful. Now, I know you mentioned something, so I've got a few questions here. I know you mentioned something about a notice of correction. Now, will the lender see a notice of correction if a customer puts a notice of correction on the account? Would the lender see that?
Absolutely, yeah. So I would just say putting a notice of correction on, I think I covered a few of the reasons why. So it could be a vulnerability, it could be if there's something negative. But the reason for putting that on there is that short statement just to explain why something happened, for example. So if you've got a period of late payments and you want to explain why that happened, you put that note on there to say, I was made redundant, it took me a few months to get back into work, so that's why I had that period of late payments. Now, if you do that and you apply for credit in the future, the lender will then, it'll then get forwarded, by the way, so you won't have this instant decision of credit, so you won't be able to just go online and apply for some type of credit and get it straight away. What happens is it's forwarded through, usually to someone in the underwriting team, who will then take a look at it, and they'll read that statement, and then they can factor that statement into their decisioning when they decide whether or not to accept the application or refuse, because that really will weigh up how the lender wants to view the statement. But they'll see it and they should account for it.
Cool. So another question was around credit rating. Now, do we only need credit rating for when we require a lending decision to be made, or is there any other relevance for having our credit history or credit file with a business like Experian?
I'm not sure I quite understand. So do you mean, why would you want to check your credit report with?
So is there any other places where the credit file will be used apart from lending?
Yeah, so that's a good question, actually. So actually, the short answer is yes, in lots of places, funnily enough. So when you apply for credit, now, this is where we usually think the credit report is used. When you apply for credit, the lender who you apply to will use one or more of the three main credit reference agencies to assess your credit information. Now, we know how that bit works, and we've talked about that, but there's lots of circumstances where companies, not necessarily for lending purposes, will be checking the information on your credit report. Now, I'll list a few examples. So mostly because these organizations will check maybe more limited information, but they will be checking your credit report. Now, applying for a job is one. If you apply for a job in lots of sectors now, but particularly financial services, they'll often do a check of your credit report, possibly to bring back information on whether or not you've got outstanding court judgments or insolvency, like bankruptcy, for example. If you're renting and you choose to rent somewhere, as part of their background checks, it's likely they'll check your credit reports as well. So that's another one. But then there's other services that may check your identity. Things like renting a car, for example. They may check your identity when you go through their services to make sure that the name and address you're giving them is the correct one. So things like that. So there's lots of other uses and lots of other reasons why people would check a credit report rather than just lending credit.
Absolutely. So it is for anyone who's wondering, well, I'm not looking to borrow anything. I'm not looking to make any lending decisions. So I don't need to worry about my credit report. That just explains that, yes, there are other instances where it's beneficial for you to be able to accurately have an accurate credit report. So it's very important that you keep up to date on what's on your credit file at any point in time. Thank you very much for that, John. Now, there's a question here. It says, there are a number of credit reference agencies in the UK. Do I need to set up an account with all of them to know what information lenders see on my report?
Yeah, that's an interesting one. So my short answer to this is check your credit report with all 3 credit reference agencies. So Experian, where I'm from, and then there's Equifax and TransUnion. If you want to do a full financial assessment, so you want to see where you stand, what accounts you have, and what each credit reference agency holds on you, that's what you should do. You can get it for free. Like I said, it's what's called your statutory credit report. You don't necessarily need to sign up for any account to do that. You just order it from each of the credit reference agencies. It doesn't cost you anything. It used to cost £2 and it's free now. You have the option through the different credit reference agencies to set up an account. So for us, we have a free account where you can just monitor your score every month and see how your score is changing. And that's really good if you've checked your report and you know where you stand, and you can kind of then see any fluctuations. So if your score dips one month, particularly low, you might be able to then think, okay, I should probably check my report and see what's happened.
Yep.
But my advice is, yes, check it with all 3. It doesn't cost you anything. You don't need to sign up to accounts to get your statutory report. You have optional credit. You have optional accounts to get if you want to check other things like your score or get premium services with any of the credit reference agencies.
Okay. Thank you. The next question was, what right do I have to correct any inaccurate data recorded on my credit report? I know you made mention of the notice of correction, but what rights exactly do we have? Is it that when we make that request for that to be corrected, that would then be corrected automatically, or are there limits to what can be corrected?
Yeah, interesting. So in theory, information that lenders put on your credit report should be accurate and should reflect the facts. There are times where sometimes you'll check your credit report and you'll think that's not quite right. That there shouldn't be an outstanding balance, or maybe there's a missed payment showing that shouldn't be there. But it's important to make sure that whatever's on your report does reflect the facts. So we can dispute that information for you. There's a couple of ways. Like I said, in kind of going through the slides, we can do that for you. So if you contact Experian, we can contact the lender on your behalf and say, this is under dispute, we've been told this, can you please investigate it and then come back to us? And ultimately the outcome of that is they'll come back and they'll either change it themselves or tell us to change it, or they'll come back and say, actually, we think it's correct. If they do that, then it would be advisable for you to contact the company then and start a formal process to get that investigated with you directly. So you can do that. But more often than not, if there's a mistake or an inaccuracy, then it gets corrected. And I think from my slides, I think anytime we go externally to companies or lenders to correct information or dispute information, they get resolved within about 11 days averagely. So quite a fast turnaround, particularly if you've got an application looming that you are interested in making sure that you look your best for.
Cool. So
yeah.
we got an interesting one here, the one that I'm sure everyone's waiting to hear. It said, does GDPR allow me to ask credit references to remove any information from my credit report?
Okay, so no. No is the short answer to that. When you apply for credit, so if we talk about credit, for example, now all credit reference agencies have certain information shared with them. Again, legally, things like public record information, which is public record, and we store it on our databases because it's a way for people and lenders to check what's on there. But credit account information, so things like applications for credit, things like your actual account, so your bank account, loans, mobile phones, credit cards, home utilities, things like that. When you go through the process of applying for those accounts, you effectively give that lender permission to share that information with credit reference agencies. Now, it's done so as a basis of lenders need to be able to assess the risk and be able to effectively make sure they're lending responsibly. So whilst that's in place, and that's a good thing, by the way, to make sure that they don't give out any credit to people who can't necessarily afford it, but you don't have the right to just request that something is removed from your credit report. You have the right to view it, and you have the right to see it, and you have the right to make sure that it's accurate and reflects the facts, but you can't just ask us to remove the information if it's legitimately meant to be there.
Absolutely, thank you. So another one here says, my credit rating is excellent, but I still get refused for credit application by a lender. So does it really matter what my credit rating is?
Yeah, that's a good one. So we do see it come up from time to time, and it's based on a number of factors. And I hope you don't mind me reverting to my slides when I talk about this, but the three things that go into the application with the lender are their own records. So if you bank with them already or recently, then you've got your application form, which is all of your affordability information. So what's your salary? Do you have any dependents? Do you have any savings? Are there any other outstanding things that you pay for? Child maintenance, for example. All of those things, and it kind of looks at your affordability. And then you've got your credit report as well. So the lender will base their decision on all of that information. Now, that may mean that when you apply for credit, although your credit score might be perfect, it might be 999 excellent with Experian, for example, there's a chance that some lenders may refuse certain products based on the other information. It doesn't mean anything particularly too negative about you, by the way. It may just be lenders have a certain policy, a policy rule about a minimum salary for a product, for example. And if the thresholds that they want for a product is £40,000 and you don't quite meet it, that might be the outcome of the decision. What I would say is, if that's the case, now if you've got an excellent credit score and you're applying for credit products and you are still being refused, then use comparison services, so eligibility checkers, to check what you are going to get first, or check the likelihood of being accepted before you apply. So for credit cards, loans, and mortgages, use comparison sites. We've got one, by the way, on the Experian site, but you know probably all of the major ones in the market, and they'll do things like, and we do things like telling you how eligible you are or how likely you are to be accepted when you apply. So it could be 90%, for example. It could be that you're pre-approved before you apply. So you use this service, it doesn't affect your credit score, but you know beforehand that you will be accepted. And for other things, you get to know the rate that you will get before you apply. You also get to know the credit limit for some things, if you're applying for a credit card, for example. So use those as best you can before you apply for anything, so you know who to apply to and what kind of you're going to get. And all of that doesn't affect your credit score until you actually apply for the credit. So it's a great way to do some research and do some prep first.
Cool. So this one is particularly relevant to our audience because a number of us may be new to the UK. So the question is, I'm relatively new in the UK. What is the best way for me to start building a credit footprint?
Sorry, the line cut out there. What was the question again? Sorry.
Yeah, I am relatively new in the UK. What is the best way for me to start building a credit footprint?
Yeah, that's a really good question, and actually quite common for a number of people. So they could be new to the UK. You could be just turning 18, for example. And really, I would just set the scene first that it takes some time to build up that credit report and good, healthy credit score of history, because that's what you're trying to build. It's a history of borrowing credit or having credit accounts and managing them well, and that's how lenders are then able to assess that you're stable and you're not too risky to lend to. But there's easy ways to start. Now, the first is trying to get on the electoral roll. So if you can do that first. And the second thing is start trying to get some accounts in your name. Now, these could be simple things like getting a basic current account in your name, but getting home utilities could be gas, water, electric, accounts like that. If you can get them in your name, for their monthly accounts, they'll show on the credit report too. Even a mobile phone contract. You know, and a good way, if you can get it, which I'd say use comparison sites for first, is a credit builder credit card. But using that very, very wisely, and be strict with yourself, and try and manage this as best you can, is keeping the credit score, keeping the balance on that credit card as low as possible. Maybe use it to buy, you know, a few bits from the supermarket that you would do normally, and then pay it off in full every month. And that's the best way to manage that card. But just trying to get a few of these basic accounts in your name starts building up your credit history. Now, when you open a new account, it takes a bit of time to show up, and it takes a bit of time to build a positive credit history. And we usually say about 6 months to a year. That's when you're starting to build a really positive history behind you. So start doing that with some accounts, and then you'll start to see that improve. And that's how you start building your credit history.
Okay, thank you very much. This one is particularly relevant to the times that we're in, with the challenges with the economy and all. It says, if I'm unable to keep up with payments due to unforeseen circumstances, like a lot of people have found themselves, you know, with all the impact from COVID, what can I do to ensure my credit report is not negatively affected?
So, actually, it's quite an interesting one, because, you know, we know it's, for a lot of people, very difficult, at least in terms of being able to keep up with the repayments they had in place. Now, that could be because of redundancy, could be because of, you know, being on furlough, for example, or other circumstances, which may mean the household can't necessarily manage its bills. But it's important to know a couple of things. Now, the first is there's lots of measures in place which have been put in place by the credit reference agencies to make sure that if you take certain precautions, and we call them forbearance, things like payment holiday, which is quite common at the moment because of coronavirus, your credit score and credit report are protected by that. They're not noted on there that you've taken a payment holiday because of coronavirus. But that's a very specific scenario, and other lenders might be doing that might be even more appropriate for your situation. Could be things like increasing the credit limit, or maybe reducing the interest rate, or maybe switching from capital and interest to repaying interest only for a short while. So think about what it is, but if it's coronavirus related, your score's protected, and we don't note it on there so other lenders won't see it. But it's important to know how that support from lenders will affect your account. So usually, in most cases, if you take a payment holiday, interest will continue to accrue on the account. So, you know, your balances will keep going up, and your monthly payments after that will start to increase, likely, in that scenario. But if you're in the situation where you would struggle normally to meet your monthly payments, and it might not be related to coronavirus, for example, then I'd say a couple of things are important. The first is, before it gets anywhere near out of hand, and what I mean is, try not to even miss that first monthly payment. So keep an eye on dates and bills and so on. But if you will struggle to meet it, speak to the lender as soon as possible. Make sure you explain your scenario and see if there is any help that they can offer you. And lenders will usually be pretty good at helping support you. And then in the other scenario, I would say, is if you're already going down a road where you will struggle to repay your normal monthly bills, maybe you've got a certain amount of outstanding debt already, then you may want to start thinking about, actually, I maybe need some help here, at least in terms of some free debt advice help. So there's loads of places you can do it. So Citizens Advice, National Debt Line, Pay Plan, Step Change, for example, just to list a few, but really good organizations who can help offer support and guidance around how to manage any debt that you have outstanding, and particularly if you can't make the payments on there at the moment as well. So try and do whatever you can to kind of support your situation and know where you are. And if you need help, never ever be afraid to ask for it, by the way, whether that's going to the lenders, whether that's going to a free debt advice charity or organization, or even asking a credit reference agency for a bit of support, at least in terms of how things affect you. Do any of those to try and help your situation.
Cool. How do you check for things such as CIFAS, CIFAS?
So there's a section on your credit report which is for CIFAS, which is the UK's fraud prevention service. Now, if you've been a victim of fraud, there may be an entry in there. It shows on your credit report, by the way. It's got a section on there which will note any entries. So if you've been a victim of fraud, it'll put it in there. You can, by the way, opt yourself to have a note put in to CIFAS. It costs, I think, about £20 for 2 years. That pricing may have changed, by the way, but what it means is they'll put a little note in there, and it kind of adds a little bit of extra security. If you've been a victim of fraud, and this note's in there, it may mean that when applications for credit are made in your name, lenders will do a little bit more of a thorough check. So they may come to you directly and ask you for more documents or just confirm the application's genuine. So it can help in that regard. But what I would also say, just to tag on to that, is if you have been a victim of fraud, then do consider adding the password to your credit report. So what we call the notice of correction password. You can add that with us, and that means when applications are made for credit, the lender should check this and then ask for that specific password, which of course no one else could guess or no one would know, and that way you help protect yourself as well.
Cool. One man says that if your credit provider increases your credit limit, does that indicate that you have a good credit standing?
That's a little bit mixed. Now, the only reason I say it's mixed is lenders actually, if you have an existing credit account, so a credit card, for example, lenders can do root checks to see how you're managing other forms of credit and your account in general. It may just mean they base that decision just on how you run your account, by the way. But however, that could mean that they may decrease or increase the credit limit. What I would say is always be careful about when that happens. Now, they'll give you the option of contacting them and saying, you know, don't increase my credit limit. I wouldn't want to. Because in terms of your credit report, having a high credit limit is a good thing, but having a low balance is a good thing. Yep. So if you can do those two, that's great. But often, I think what we can find is that when lenders put limits up on credit cards, it doesn't necessarily mean that you're doing great with everything financially. What it could mean is that the way you've run that account means you're eligible with that lender for a slight increase. But what you don't want to do is then be tempted by suddenly having an available credit that you didn't have before and going out and spending. Because if you do that, ultimately you're accruing more debt that you have to repay. Credit cards can be quite expensive, by the way, of doing that. Yep. And also it means you're just borrowing more and getting closer to that credit card limit, which will then reduce your credit score. So if you get it, that's great, but just try not to be tempted to use it unless it's, an actual emergency that you need that available credit for. The best advice is high credit limits are good and low balances are good. Cool.
Thank you very much, John. That's all the questions we have to take today. I appreciate your time. Thanks for all the viewers. Thanks for joining us today as well. That brings us to the end of our program today. And look forward to seeing you next week. Thank you. Bye-bye.